Hi, it's Jerry Parker again. I'm helping investors build their investment property portfolios, and I've got a training program, coaching program, and you can click down below and see what it's about. People, have you ever considered that properties like gold? What are the similarities? We know gold is scarce, it's like rare, and it's just a commodity. It doesn't earn income, and it just goes up in value. People can use it as money. So it's scarce and it's in demand. Well, property is scarce and in demand too. And the more scarcity you get from the property, the more price increase you can get when there's demand. How do you get scarcity in property? Well, every property's got one unique feature, its address. It's the only one. It's the only address that property has. And with its proximity to places where people want to live, that address, it becomes scarce. And so how do you capitalize on this scarcity with property? Well, one method that I like to use is you find out the new major billion-dollar infrastructure projects, and then you go find properties that tuck right in close to the infrastructure. And infrastructure I'm talking about is ones that people like to live near, such as like a train station, a new hospital, a new major shopping center, or a new major town center. And these are infrastructure projects that if you buy there when it's new, 10 years later, well, of course, you're having capital growth because people are like, how did you get so close to the train station? Other pieces of infrastructure is like major roads. They have an effect of bringing, say, maybe a CBD a lot closer to where you are. So that's another avenue for, creating the scarcity in property. And so this location, a lot of people think that is this the right time to buy a property? Is this the timing right? Is interest rates right? Or is the market right? Well, if you're going to try to guess that, you'll never guess it. It's virtually impossible to guess. Experts can't guess that. So it's much better to rely on location than it is on timing. So if you just identify the great spots, the great infrastructure spots, tuck in close to those and let the location do the heavy lifting for you. And as a passive property investor, location is extremely important because usually you'll borrow money to buy the property, and then the tenant will help you pay the interest. You'll get some tax as well, and that'll help you pay the interest. But all that money is just spinning around in circles. It's really not going anywhere. You have to have growth. You have to have capital growth. And the scarcity factor in property is what will deliver you the capital growth over the time. And this is how people become wealthy in these inflationary environments. So if you need more help building out your entire property investment plan, a coach, two heads are better than one. I've got a program. Take a look down below and click on it and tell me what you think. Sign up, give me a call. Have a great day. Cheers.